Hey, this is Mike, and it is Saturday, October 10th, and I just wanted to do this video to talk about what happened to GameStop on Friday. It fell 11%, and it fell a little further, another 2% after hours. And since I'm really big cheerleader of GameStop, I wanted to address what happened, why the stock fell almost totally 13% on Friday, and what I think is going to happen going forward and why I'm not really concerned about this fall in the stock. So before we get started, if you could please put a like on this video, it will really help the algorithm, help people who are interested in this information to find it. Thank you very much. Okay, so let's talk about GameStop. So what happened? GameStop fell 11% during market hours on Friday, and then after hours fell another 2.25%. So as if you've watched my previous videos, you know that I've been doing cash secure puts on GameStop, and I had put a cash secure put on GameStop this morning, like right after market open. So I put it, I think it got filled around the 1284 mark, and I put a cash secure put at the 12 level. I sold 5 contracts. So basically, the stock has fallen all the way down to where that strike level is, and those puts expire next Friday, so October 16th. Now, here's the reason why I'm not really concerned is one, the stock rose from 922 to its announcement all the way up to a high of 1446. Now, usually when you have these big pops, you will get a 50% retracement back. And 1202 happens to be exactly the 50% retracement. So basically, this stock has had a 50% retracement from the high of the day. From the high, basically from its peak, is now down 50%. And when you consider after hours, it's down more than 50%. Now, the first reason, when I watched the stock pop on Thursday, it popped really from 9 to 11. And I thought this is good because its previous 52-week high was about 1070, so it popped above its 52-week high. But the reason why it kept moving upwards because 89% of the shares in GameStop were short. That means all these people had a short. So that just pushed the stock further higher. And also, you have short-term traders that all they do is they look at stocks that pop and then they buy to kind of ride the short squeeze, and then after they feel like the short squeeze has topped, then they sell off. Now, the three things that really caused the stock to fall was one, you have the short-term traders who are just in to make a quick buck. They come in maybe at 13 and then they sell at 14 and then they're out. So you get selling there. You also get the shorts who have covered. So you get selling there. And then the final thing that was the biggest catalyst for its fall was you had analysts come out who were short, who basically had sell signals on GameStop come out and say, hey, Microsoft's big deal with GameStop, the big multi-year partnership, has been overblown. And one analyst reiterated his $3.50 target price on GameStop, and another analyst reiterated his $6 target price, and that pushed it out. Now, I can understand why the analysts do that because here they are saying GameStop is going to go to $3, and then it goes all the way up to $14. As an analyst, you look really foolish, so you're going to say what you have to say to kind of push the stock down, for lack of a better term. And boy, did they do their job of doing that. Now, the stock closed at the low of the day, at its low of the day, 1202. Because of that, you're going to get a lot of capitulation selling. You're going to get selling from people who probably bought the stock at 13, only to see it fall back down to 12, and they get frustrated and they sell. And I expect to see further selling on Monday and Tuesday. That usually happens. So I expect GameStop to fall down to 11. However, usually, I mean, most of the time, when you have a stock that has fallen more than 5% in less than 10 trading days, and that stock is above the 50-day moving average, you get a bounce. And just to give you an example of that bounce, I can go back here where I started my trading on GameStop was I started trading on GameStop when I found out Ryan Cohen, the founder of Chewy, was investing in GameStop because the guy built an e-commerce pet food company from zero all the way up to a 26, $27 billion company. And he wanted to take GameStop and take what he learned from Chewy and turn GameStop into an Amazon competitor. And I've stated I don't believe that Ryan Cohen's going to be able to take GameStop and turn it into another Amazon, a trillion-dollar company. But I do think he's going to be able to take what he learned from e-commerce and apply that to GameStop and be able to turn it into a very formidable e-commerce company that could be worth as much as Chewy. So if you look at a company that's worth right now 780 million, if it could be worth just 20 billion, that's almost a 30-fold increase in the stock. So I'm very bullish on GameStop over the long term. And I like doing cash secure puts. But the one thing I want to talk about the cash secure puts is that I started doing cash secured puts. Actually, I started over here. This is where the pop happened. The initial pop happened was at around 947, and I did a cash secured put at 9. And then I saw the stock after the Ryan Cohen announcement, the stock fell down to 875, so it fell below the strike price, but then it ended higher, and I was able to close at a profit. So I do believe that I started my cash secure put, my latest trade at 12. Now, I do expect GameStop to fall below 12 next week down to 11, but I do expect it to bounce off that and maybe retrace half of this loss. So basically, the top here is at 1446. It's now at 12. It's going to go down to 11. So that's sort of a 3-point spread. So I think it's going to pop back up to 1250 by Wednesday, and by then I'll hit the 50% profit target and get out of the trade. And if not, if it keeps continuing falling further, I'm fine. I'm fine owning shares of GameStop because then I'll just do the wheel strategy. I'll do a covered call. And the premiums, because of the volatility in GameStop, the premiums are really, really expensive. And when premiums are really expensive on options, you want to be a seller of options and not a buyer of options. So just to let you know how I feel, if you're into GameStop and you're panicked about this, this is why I do cash secure puts, is because you can be wrong in the short term and still end up being in a good position to profit. And even if you are wrong, even if I am wrong and the stock by next Friday or this upcoming Friday is below $12, I'm happy to own the shares and then do covered calls. So that's how I feel about GameStop. And just remember, it's really about the long-term game. I believe, my personal belief is that 5, 6, 10 years from now, GameStop is going to be worth much, much more than it is now. They've got 5,500 stores. They could always close a few stores to raise capital. They also have 800 million in cash and only 500 million in debt, and they're going to get a lot of cash in the fourth quarter from console sales. So I'm feeling good about GameStop. So I hope this video was valuable to you. If it was, I come out with more videos every day, and I hope you enjoy this. Okay, thank you very much. Bye.